When people start out in business, they've got a couple of initial goals and initial targets they want to go for, at least in my experience. Number one is can they, well, first of all, is make some sales, get some cash coming in. But at what point in their business can they replace the salary they had in their previous job or their previous career? That's job number one. And then they can continue to grow and develop. And then they want to break through maybe the £10,000 a month sales threshold. And that brings with it some challenges and some opportunities as well. So, first of all, as a disclaimer, I'm not an accountant. I'm not going to advise you on what you should do about your financial structure of your business. Just to give you some observations and some pointers that I've come across, my recommendation is go and speak to an accountant. If you want some recommendations, I know some very good ones. Drop me a note. I'll ping you some details. Go and speak to a qualified accountant. But what happens is, once you get to 10,000 a month, 120,000 a year, you've clearly broken through the VAT threshold, and that will apply to most businesses pretty much. Depends on what sector you're in to a degree, but it will apply to most business. Especially the frustration is if you're in the B2C sector, selling to the public, for example. Maybe you're a martial artist, or you're running a salon, or you're a plumber, or you're a builder, or handyman, whatever it is. Charging VAT becomes a 20% extra burden on your business. Now, it doesn't have to be 20%, but you have to charge 20%, but you can have a flat rate scheme. There's all sorts of methods and things you can look at depending on your sector. However, some of the information you're going to get or the advice you may be given is there's lots of ways around VAT, around charging VAT. Now, if you're avoiding taxation, that's one thing. If you're evading tax, that's another thing. I've heard of some weird and wonderful schemes out there. Create an LLP, fragment your business, break it up into little bits and pieces, and have different divisions and have a holding company and all this sort of thing. Now, HMRC will look at these schemes and not take to them too kindly if all you're doing is structuring your business to evade the VAT. They will use phrases like artificial separation if you've fragmented your business. You may be advised to go down the CIC route and make your company into a charitable sort of institution. Now, all these things are possible, but I do see some people jumping in feet first and staying maybe as sole trader and doing weird and wonderful things with offshore funds and transferring money, and it's bizarre. You're going to get caught out. So when you break through the VAT threshold, and the VAT threshold in the UK is about 84,000 a year, I think it is now, something like that. So again, speak to an accountant, get some technical advice and guidance, and try not to be doing anything too clever or amazing or detailed with all your structure. If it was me, when I've done this in my career, if it was me, I would go down probably the limited company route. I'd be VAT registered probably from day one, get it over with, and I just get on with it. I may go down the flat rate route to start off with, but I've seen companies where they're in the B2C sector, they're VAT registered, they're paying 20, they're charging 20%, and they're claiming off. Now, how do you know whether to go down the VAT route and be flat rate or the normal standard rate? It really depends on the mix of your direct costs, what you're claiming back VAT wise from your suppliers. So you've got lots of materials involved, for example. It'll be a different approach than if you don't just have labor where there's no VAT involved. So just watch out for the advice of this breaking through the £10,000 a month mark. It can be done. If you do get VAT registered and you're at let's say 84, 85,000 sales, if you do go down the VAT route, it is going to cost you some more. Even if you're on flat rate, it's going to cost you some more money. So you've got to either put your prices up a bit, grow your business a bit, or do something to increase your cash flow. But you can trade through it and come out the other side. Just watch out for these elegant that may be destructive models that HMRC may not like too much. So if you do want to be linked with a good solid accountant, I would recommend ping me a note. I'll introduce you to them. Depends on what sector you're in, which one will probably suit you best. But get some advice, get some guidance. Don't just speak to the bloke down the pub. Not going to work out for you. Do it properly. Do it right. Drop me a note if you want some help, and I look forward to hearing from you. Bye for now.